what I usually see happening, and obviously not everyone's the same, but usually happens, it goes from I'm a sole trader, exactly using the trading example of register for an ABN, click of a button, I'm good to go. I'm now, without knowing it, a business owner running my own business, but I'm just a sole trader. So nothing really has changed in my day-to-day activities from yesterday to today. And then things progress and we get to the end of the first financial year and it's time to lodge your tax. And the big one that I see is people not saving for tax.
Welcome to More Than Money with your host, Ross Marais. This episode of More Than Money is brought to you by More Time Financial, a financial planning company who are on a mission to help young Australians make smarter decisions with money by providing real-life financial advice, coaching, and financial education.
Hey, what's up? It's Ross Marais. Welcome back to another episode of More Than Money. On this podcast, I have real conversations about lifestyle, money, and business. Sometimes I share interviews with business owners and entrepreneurs about starting their own business and their journey. Other times we do financial education and informational episodes to help you make smarter decisions with money, just like this one. So if you're new here, consider subscribing. Now, before we get started on today's episode, this is just a friendly reminder in order to keep our lawyers happy that in preparing this podcast, myself and any contributors have not taken into account any particular person's objectives, financial situation, or needs. So before acting on any of this information, you should consider its relevance to your personal circumstances, and if required, seek the assistance of a licensed professional. Hello and welcome back to the More Than Money podcast. On today's episode, I have a little bit of a different episode for you, and I am actually getting interviewed on this podcast. So as you would know, I'm normally the interviewer and ask all the questions to the guests I have on the show, but I decided to switch things around a little bit and give the questions over to one of my business partners, Dean Holmes, who is a financial advisor himself. And I've been working with Dean for a little while and decided to give him the microphone today and get him to ask me some questions about the things that I do in the business and some of the client challenges that we help our clients overcome. And today's episode mainly focuses on the challenges that business owners face. So business owners are a large part of my client base, the clients that I enjoy helping, or one of the types of clients I enjoy helping the most. And in today's episode, we talk about some of the challenges that business owners that both myself and my clients deal with. So in particularly, trying to manage both your home life and as your business life, because we know as business owners it takes so much time and energy to run a successful business, and sometimes things need to be sacrificed. So some of the challenges and some of the big questions and decisions that we help clients overcome, we talk about all that in today's episode. So be sure to stay tuned and hope you enjoyed today's episode.
Good morning, Ross. You're a business owner trying to help business owners. So the first question for you today is, why did you start your business?
So I started a business with my dad, Alan. I think we're up to about 5.5 years ago now. And I'd always had that, I think it was those entrepreneurial tendencies, and I always kind of cringe at that word entrepreneur because I think it gets thrown around pretty loosely. But I think I always had that previously from having a lawn mowing route or route around the neighborhood, washing cars, all that kind of stuff. So I was always that way inclined. And then I saw the benefits of my dad having his own business, so his own financial planning business previously. And I saw some of the benefits that come with that. So I think I was always kind of destined to go down that track at some stage. It probably happened a bit earlier than I'd anticipated, but it was more so I was working for the really nice financial planning company, AMP, which is getting a good rap at the moment. And then, we had a chat one night and decided that we were going to start the business together because I was looking, there wasn't that many jobs out there that were coming up at that stage. And then we said, let's maybe look at starting the business together, not really knowing what I was going to be in for the next 5.5 years. But yeah, that's kind of how it started.
Yeah, absolutely. And it's funny that you say that you sort of started it on a whim that you hadn't necessarily planned about it for a long time, and then you talked about it and started. And I think lots of your listeners who are business owners as well might go through that same journey where they're either skilled at something and then they decide to start a business around that, or just start selling t-shirts and it just happens to turn into a really big business. What do you see in that regard?
Yeah, I think it's especially like here on the Gold Coast where I am, with a lot around with tradies. I think that happens a lot where they're working for someone else. They can see that they can potentially start earning more working for themselves, and then they just like, okay, get registered for an ABN, a few clicks of a button, and they're registered, and then they start being a contractor or sole trader the next day, and they don't necessarily realize that they're running a business. They just think that it's, well, yesterday I was working for someone, today I'm working for myself. I'm getting paid an extra $10 an hour more. Everything's all good. And I don't think there's that connection of like, okay, I'm actually running a business. I'm just working for myself. So yeah, I think that's a big one that I see on the tradie side for sure.
Yeah. And it's the evolution, I think, of going, well, I'm self-employed and I'm on the tools for the people that understand that I'm self-employed and I'm doing the work myself, versus that evolution where I'm starting to think about, I need to employ people and start to build a business around myself as the income generator.
Yeah.
And so some of the challenges that we might face in that period, do you want to talk us through that first couple of years about what goes right, what goes wrong in your experience when we move out of self-employment and into that sort of first stage of self-employment?
Yeah, I think it's something that is a massive challenge, and it's something I've spoken about it on a few previous episodes as well. So I think it's that initial 2-year period where what I usually see happening, and obviously not everyone's the same, but usually happens, it goes from I'm a sole trader, exactly using the tradie example of register for an ABN, click of a button, I'm good to go. I'm now, without knowing it, a business owner running my own business, but I'm just a sole trader. So nothing really has changed in my day-to-day activities from yesterday to today. And then things progress and we get to the end of the first financial year and it's time to lodge a tax. And the big one that I see is people not saving for tax. And I've brought this story up a few times before, but the guy, he was an employee for 20 years, just an employee, got his tax paid for him, got his super paid for him, didn't have to worry about anything, rocked up, did his job, went home. Then exactly that, registered for an ABN. 2 years later, gets a knock on the door from the ATO saying you haven't paid tax for the last 2 years. And I don't know if I fully believe him, but his defense was, well, no one told me I had to pay tax. For the last 20 years, I've never necessarily had to worry about it because someone else did it for me. My boss did it for me. So no one told me I had to pay tax. Which
I think it's a little bit naive, but it's
100%. But
it's a good example, Ross, of where the jobs of a business owner aren't just your craft. So if you are a bricklayer, and it's a good example because my old man ran a bricklaying business as well, is that if you're just a bricklayer trying to do bricklaying again in your business, then there's a lot of other jobs that you need to do as a business owner. Even if it's just you're an ABN and are self-employed, there's a ton of jobs that you have to do that you never knew happened when you were in that employee world.
Yeah. And I always laugh when people start working for themselves. They're like, oh, now I realize why my boss was this way inclined, or my boss said this, or my boss was this stressed, or my boss always told me to do this. Like, I just thought he was my boss and I hated him. But now I'm like, oh, okay. I empathize with all the stuff he had to deal with because I had no idea. I was just doing the job that I was there to do.
Absolutely.
So I think.
So what about the risks? So people might jump into these businesses themselves. So registered for the ABN, start the company. What are some of the risks that they should be thinking about when they're thinking about making the decision? So whether they're already doing it or they're just about to jump, what's the couple of categories of risks that we should think about?
I think the first one is that personal risk of you, without knowing it, you now are a director of a company or a shareholder of a company, that there are rules and regulations that you have to abide by. Like there's the tax rules and all that kind of thing that you legally have to abide by, that no one really likes to worry about and think about because it's just, she'll be right, I'll sort it out later. But yeah, from a tax perspective, like obviously remaining solvent and doing all those things that you legally have to do, the reporting, the tax, all those things that you never ever get told about or taught about. So I think there's definitely that from the side of the legal ramifications of being a director and a shareholder of a company. And then there's the personal risks as well of if you do something wrong, you're held liable as the director of that company. And I think that's a big one that people don't really understand. Now, obviously, there's riskier industries and than others. So if you, again, using the t-shirt example, if you have a t-shirt company, it's really not that much can go wrong. Obviously, I'm sure there's some outliers examples, but if you're running a construction company or something like that, where you're responsible for people on your job site, you're doing things that if something goes wrong or someone gets injured or something that you've built hurts someone or something happens,
we've had buildings fall down in Sydney, so
yeah,
that does happen.
Yeah, you're held liable as the director of that company. And if you don't have the right structure in place, like you would know that if we don't have the right structure in place and your personal assets aren't protected, then you can be held liable in your personal name. And that's something that, it obviously we don't wish it happens, but it'll happen every day that people just are like, oh, I didn't realize that I could lose my house or I could do something like I'm just director of a company. Like no one told me about these
Absolutely.
legal ramifications.
And it's a little bit of the challenge that we have as professionals is to start with the end in mind, to almost dream what our clients might be capable of, and then create structures and talk to them about the risks and things like that. And sometimes we don't get to see the people until they're partly successful. So they don't always talk to professionals before jumping into these decisions. And so what are a couple of examples where you've seen where people have started on the journey and then realized that they've sort of not structured or protected the risks properly?
Yeah, I think it's something that we come across all the time where, again, starting small, sole trader, okay, maybe my accountant, if I do have an accountant, told me that's probably a good idea to start a company. So you go from sole trader to then start a company. Oh, you're filling out the company forms. What's easiest? Oh, to chuck all the shares in my name personally. All good. All right, we'll worry about it later. And then it's not until like a year later, then you start to do your tax return. You're like, oh, okay, this thing's exploded, which is obviously a good problem to have, that the company's gone really great. And now you've got 100% of shares in your name. Everything's in your name, and you're running a risky company. I keep using the construction company as the example because it's a good one. So then you've got a sole director, sole shareholder, everything in your name. Maybe, and it's usually the case for the younger clients that I work with, that you've bought a house, maybe an investment property. You've just haven't really thought too much about it. So you just put it all in your name as well. So then what you've got is a single shareholder, single director that holds all their personal assets in their own name, or maybe a 50-50 with their partner. So then if they get sued, then they're up, everything's in their name. There's no structures, no protection in place. But when you ask the question, they're like, well, I just started this company. Like I didn't really think about, I was just worried about the day to day. I wasn't thinking 5 years ahead, which obviously as humans, we're not great at doing.
But are we trying, in that example and things like that, Ross, are we James Packer? Are we trying to create billion-dollar structures so that we can't get sued? Or is this actually relatively smart and simple to execute?
Oh, it's definitely smart and simple to execute. I was chatting to an accountant about this the other day to say, why don't more people have trusts set up? And that's obviously what we're talking about, which is maybe a little bit more complex for today's topic. But I said, well, what's the difference of you setting up a company versus you setting up a company and a trust? And he said, it's an additional like $500 to do it. And he said, most people are just like, no, let's not worry about it. And you and me know the implications of paying $500 today when we first start a company to what will happen in 5 years' time when we have to restructure this company or this thing and potentially pay $500,000 in tax at that stage. Whereas if we had paid the $500 up front and got it sorted, we could potentially reduce that $500,000 down to $100,000 or something.
Yeah, and that absolutely is the start with the end in mind. And that sometimes there's a frustration that a client will come to you with a tax bill and you can't solve it. But if they came to you the year before the tax bill arrived, you might be able to change it. Not promising anything, but that's the forward planning that we're trying to encourage for business owners, is that these businesses we start, they could be successful and they should be successful. And if those two things are true, let's not make the final mistake of having the structure to be inefficient, which means that you end up paying more tax along the journey.
And I think along those lines, it's the same thing, and we'll touch on this in a second, but about buying a house. Like, so many times people come to me and say, oh, we've just bought a house like 3 months ago. It's like, great, you didn't want to pick up the phone and tell me before you bought the house because you bought it in the wrong name, or you didn't even have the conversation. So it's all in your name where it could have been in your partner's name to reduce the risk because you're the risky person. Just having that conversation, a little bit of foresight, which again, I know we're not here as humans, we're not great at doing, but just asking that question or just having that thought of, okay, before you start a company, where's this going? How big do we want to take it? And no one knows. As I said, no one's thinking this at the start. But
no, but for $500, you'd think that we could convince people to do that little bit more to give them that flexibility in the future.
Yeah, definitely.
So Ross, how do we, as business owners, how do we deal with the two challenges of growing our business and growing our personal wealth or personal life? So I see examples where people have taken money out of their company, whether it's salary, wages, dividends, or just borrowings, but they take money out of the company to do personal things, and then that starves the company of oxygen, which is cash, to do their business activities, and vice versa. They leave too much in the business, and then they don't get to buy their own house. So how do you have those conversations and sort of navigate those two competing goals?
It's a challenge. So I don't think there's a silver bullet for this, but it's a challenge, again, especially with the younger clients that I'm working with, where from that period of, say, 25 to 35, we're going through, and I've mentioned it a handful of times, we're going through almost 90% of the major life events that we're ever going to experience. So we get into relationships, we're getting married, having kids, buying a house, maybe selling a house, buying investment property, hopefully not, but maybe getting a divorce, having a second child. All those things happen in a very short space of time. And if we're starting a business in there, we just throw an extra heap of complexity on top of that. So I think it comes down to planning ahead, which is obviously the thing that we do in our business, and setting out those priorities and being super clear on what those priorities are. Because we see it, as you said, with the taking the money out. And we've had an example recently where they wanted to buy a house, but they also wanted to grow the business. So naturally the house won, because most people want to buy their own house. And we stripped all the money out of the business, and then we were just having major cash flow problems in the business. So it's having that clear understanding, and obviously if you're in a relationship, having your partner on board as well to say, okay, what is the priorities here? What are we trying to do? Do we want to buy the $1 million house as a lifestyle goal to live there and be really comfortable? Or are we willing to sacrifice that for the next couple of years to then grow this business to then help us get further ahead later on in life? And the challenge there is that instant gratification, which obviously we all struggle with, is having that instant gratification of buying that house today versus buying 3 houses in 5 years' time. And that's the hard part. But it's knowing what those clear goals are to say, okay, do you want to build the biggest business in town? Fantastic. Do you want to just build a small business and be super comfortable and have a nice lifestyle? And it's the constant challenge that we have of that money versus lifestyle. So what are your financial goals? What are your lifestyle goals? What's the priority? Where do you see it? What's your partner's goals? What's your goals? Okay, cool. Then let's map and build that to suit you. Yep. So it's not a clear answer, but it's definitely a challenge.
No, it's a challenge, and we always, in all of the business textbooks, they talk about wearing different hats, and so you wear the bricklayer hat, you wear the HR hat, you wear the manager hat, et cetera. But then we also have to remember that we wear almost like the shareholders and the family hat, and that the family hat has a big always has a big demand on us because that's how we enjoy the efforts that for wearing all of those other hats in the business. So Ross, you have these conversations with your clients, and so one way in obviously planning out this is to talk to an advisor about the moving parts. But talk to me about if you were designing the A team of support. So I'm starting a new business and I've got a business plan, etc., and I'm getting started. Who are the players that I need on my A team to support me on this journey? I don't think that the ATO tax office website is the place to start. Yeah. So who would we ideally have on our A team, and what are their sort of roles as you see them?
Yeah, so obviously from a buyer's perspective, having a good financial advisor or a good financial planner on board is key. And the reason why that's important is that we tend to take, and not taking a dig at the accountants, but we tend to take a forward planning view. Whereas generally speaking, people don't necessarily see their accountant until the end of the financial year or the start of the new financial year, and they look backwards. So we kind of help to strategize and look forward and plan ahead of everything we've just talked about. So knowing what the goals are, knowing everything that we're looking ahead. Now, obviously, you're going to need your accountant on board as well to help from the tax perspective, and they're going to help obviously make sure that you've got the right tax structure in place, help with deductions and all the understanding on the tax side. We usually find, and it's a bit of a tricky one, I'm not sure if you see it as well, but the difference between the bookkeeper and an accountant. A lot of people just think that it's just bundled up into one, and it's like, okay, my accountant does all that for me. But it's asking that question of, if you are going to work with an accountant, are they also your bookkeeper, or do we hire someone separately as well? And I think having the right bookkeeper on board from day one, while it obviously is an expense, can be really important, because they should be able to save you their fee tenfold of doing it right. And as I said at the start, we usually find that it's not until year 2 or halfway through year 1 that people realize that, okay, this thing is getting out of hand and we haven't done this properly, or it's not till they do their first tax return that they haven't saved the right amount of tax. So having a bookkeeper on board should be able to help you do that, to understand the cash flow and take care of the thing that I find, and I'm sure you do as well, that most business owners hate dealing with books, or just don't understand it. So getting someone on board for that as quick as possible would be my suggestion.
Yep. And then maybe having a lawyer one way or another, just to be aware of the contracts that you might be entering into as well.
Yeah, definitely. And obviously that's going to depend on the type of business you're in. But again, it is an expense up front, but can potentially save you thousands, tens of thousands of dollars if you do it right. And I think it's something that I see. It was actually a conversation I had a couple of episodes ago with the Elopement Collective, and they said her recommendation was having a good lawyer is important, because you can't just copy and paste legal templates from Google, which she realized that it was US law, not Australian law, that she was doing the contracts in. So she said something like that, where when you are dealing with clients, small, big, medium, large, whatever it is, having the right contracts in place, which a lawyer can help you with, is obviously going to save you a lot of potential heartache. But again, it's something like, okay, I've got a small business. I don't need a lawyer. Lawyers are only for billionaires and millionaires. But I think, that's very important.
So that's your sort of A team. And so from your role in that, Ross, how do you work with all the professionals in that A team to sort of keep things moving along?
Yeah, I think the one thing I'll add before jumping onto that is knowing what those people actually do for you. So we usually find that people have an accountant or they have a bookkeeper if they've been going for a little while. But ask the question to say, what do they do for you? What are you paying them to do? And they're like, I don't know. I just don't understand it. They just take care of it. I was like, well, that's fine. Like, I don't expect you to know every single ins and out and to be able to do it. But it's, if you hired someone to do a job for you and you're paying them, you would like to know what the expectation is. So I think it's asking that question. And I think it's sometimes people are afraid to ask the question because they feel stupid. To say, well, what am I paying you to do? Like, I've been working with you for the last 6 months or 12 months. What do you actually do for me? Like, I know I send me a report every month or something, but ask the question, like, what's the questions I should be asking you? Like, how can I make, like, what do you need from me? Like, let me just understand what it is you're actually doing, because I'm paying you, but I'm not really sure.
There's a concept, like if you relate it to a personal trainer, like you are paying for a service, but they make you better, make you fitter, stronger over time. And so with all of our professional services that are around there should be an improvement over time. And that could be my business is running more efficiently because my bookkeeper's doing a lot of the work better than what I was doing it. My structure and accounting is more efficient, and I know the tax that I need to pay, or I've got a plan for the future. But all of those things are about building us, making us stronger.
Yeah. And the other thing I'd add in there is, and we'll come to your question in a second, but maybe not in your direct A team from the beginning, but definitely important to have at some stage would be a mortgage broker, or have a relationship with a mortgage broker. Again, coming back to the clients that we work with, it's most people are wanting to buy a house. Most people are looking for finance for cars and equipment and things like that. So the thing I'll add is, or the question to ask if you do already have a team around you is, does everyone know everyone else's name? Number one, because we usually find that's not the case. And do they talk to each other? Are they in communication with each other? Does your accountant know who your mortgage broker is, and do they talk? Does your lawyer and accountant know who they are, and do they talk? Do your accountant and financial planner talk to each other? And it's something that I see that doesn't happen. And where it comes to is, the accountant does a fantastic job. Their job in most cases is to help you save tax. They do a fantastic job at that. They help you save tax. You pay next to nothing in tax for this financial year. You then turn around and say, I want to go and buy a house. So you go and see a mortgage broker. What you need when you go to a mortgage broker is you need good financials to prove to the bank that you can borrow money. Now, if the accountant's done such a good job that they've helped you pay zero tax, that usually results in you not having earned much money on paper. So then you take your financials to the mortgage broker and they tell you that you have no chance of borrowing any money for a house because you haven't earned anything for the last financial year, because your accountant has done too good of a job. So that's something that I see happening all the time, that the mortgage broker and accountant don't talk to each other, or the accountant doesn't ask the question of, what do you want to do next financial year? What's your goals? What's on a horizon? So then what usually happens is, we either need to go back to the accountant and get them to redo the books to help make them look like they've earned some money, or we have to delay the goal of buying a house until another next financial year. So then we can go to the accountant and say, look, we want to buy a house in 12 months' time. Can you please make sure that it looks like we've earned some money on paper? So I think that's the key example of them not talking to each other and not being aligned. Not your team around you are not working for you. They're doing individual jobs.
Yeah. They're hardly a team if they're not communicating at all times. Like, that's the element that I'm paying you guys to do your jobs, but you need to be working in a coordinated fashion to make sure that happens. And so you help a bit with that coordination, Ross.
100%. So that's something that we try and do as much as possible. If we already have those team in place, if we don't have the certain people, then we can obviously help with getting them in place. But usually we find people that have professionals they've already worked with. So it's getting them all together. And if need be, let's all get in a room together and just go for an hour and work out what the plan is, so that everyone's on the same page. The accountant knows that we need to earn a minimum of 120 grand next financial year to be able to afford to service the loan on the house that we want to buy. So the accountant's going to do his job to then help the mortgage broker to make their job easy, and then we can help facilitate that. So we definitely play that kind of that pivotal role in our job as the financial planner, to make sure that everyone's working together and everyone's clear on what your goals are as the client.
In some regards, I think that sometimes we're the general practitioner, that we know a lot of things about the other specialists. We're not the executors in accounting or bookkeeping or anything like that, but we know enough. And especially, Ross, because you are a business owner, guess what? You have an accountant, a bookkeeper, and a lawyer to help you along the way in your business. And so you're drinking from the Kool-Aid that you're implementing what you want to implement for your clients.
Yeah, definitely.
So Ross, this concept of GST is an interesting one for business owners when they first get started. So I always say that we're collecting tax on behalf of the government, and so that's what the GST is for. But sometimes business owners might think it's theirs temporarily or theirs permanently. So what's the cash flow challenges that businesses face really early on in their journey, and how does it get more complicated as they get bigger?
Yeah, so I think it comes down to, we maybe touched on it a little bit earlier, of saying that it's not until after the first financial year that we start to run into problems, because using the example of the guy that didn't know he had to save for tax, you see all this money coming into your bank account. So you start invoicing clients, start going well, and you see all this money come in, and naturally you think, it's in my business account, it is all mine. So then what we usually see is you earn 100 grand, they spend 100 grand. Because when you're an employee, and most people have gone from an employee to business owner, that when they got paid money, it was theirs to spend. They could do whatever they want with it. What they don't see is, one, the GST, if we register for GST, two, what tax we need to withhold, and then three, if we're diligent enough to then pay our own superannuation, because as the business owner, you need to pay your own super. So what we usually see is that 100 grand come in, and business owners don't necessarily realize that they can only spend 60 grand of it, because the tax man's going to take some for GST. We need to withhold some for income tax. We need to save some for superannuation if we're doing that. So then 100 grand gets down to 60. That's what we can actually spend. So I think it's helping people to understand, or people just don't understand, that what money is theirs in the business account, what money is the business's, how much money do we actually need to leave in the business, like we used the example before of stripping it all out to buy a house. What money do we need to leave in the business to make sure the business can still run? And then how much of that money is the tax man's? So we see that, and the way we get around that is helping people have different bank accounts or different buckets. So we can say, business money, do not spend. Your money, spend. Tax man's money, don't spend. So I think from the starting point, that can be really helpful, just to know exactly, okay, how much of this do I need to withhold for tax? If you're registered for GST, what's the implications of that? And then as we grow and as the business gets bigger, then it starts to get more complicated, which is a good problem to have, but it's still definitely a problem, because we're now not only potentially taking a wage from the business, but we're potentially taking directors' fees or management fees, or we may be taking dividends as well. So all of those different fees or different sources of income have different tax implications of them as well. So that's where it starts to get even more challenging on, okay, how much tax do I need to withhold? Another thing that we see is people just taking drawings and not taking a salary. And again, for most of us younger business owners, myself included, we have HEX debt. So then HEX debt starts to play into that as well. Because if we're just taking drawings, then we don't realize that we haven't withheld enough for tax. Then we get hit with our HEX bill as well at the end of the year. And then finally, what I see happening a lot as well is most, and not everyone, but most younger business owners at some stage looking to have kids. So then the childcare implications and childcare subsidy of Centrelink, maternity leave, all that kind of things come in as well. So this is something that I've seen a lot of people get stung with, that if they don't have a regular income, and for most business owners, they don't have a regular income. So it's hard to predict what your income is going to be for the financial year. So then if you are applying for childcare subsidies or Centrelink benefits, it can make it really difficult to know and give a forecast of what that income is going to be. So we usually find people lodge their income with Centrelink and say, this is my income for the year. And then they do their tax return and end up with a large Centrelink bill, because they told Centrelink they're going to earn 50 grand for the year, but they ended up earning 150. But they were collecting childcare subsidies and parental payments throughout the year.
Absolutely.
So that's a big one.
The other cash flow challenge that I see in businesses as they get bigger, is that, and we'll use the t-shirt business as the example, is that the accountant will be telling them they've made a profit, but yet there's no cash in the bank. And where I see this happening is it's all in your stock as you build your business. And so if you're selling t-shirts, you might have $100,000 worth of t-shirts in your warehouse. And typically where that's come from is you've sold prior t-shirts, reinvested the profit in buying more t-shirts. And so you've got $100,000 worth of t-shirts in your warehouse, the accountant will tell you you've made $100,000 profit, and therefore you've got to pay $30,000 tax to the tax office, but yet you have no money in your bank account whatsoever. And so if we're in businesses that are not hours worked businesses, but product businesses, cash flow does become an even bigger challenge, because even your professionals aren't accurately telling you what the state of the nation is, because they're saying you made a profit, and Practical Pete went going, well, where's my money?
Yeah.
That's the challenge that we see in terms of product businesses as well. And that's before you even think about taking the money out of the house as well. That creates further complexities, as you've spoken about, and that's why we would definitely need to think about how we're talking to all of our professionals to get that done. So Ross, why don't you sum up, the journey that you would go through with a business owner? What's the first 12 months of working with you like in that journey? Sort of what do I do? Who do I talk to? What kind of things do you do for business owners to help them over some of these challenges we've talked about today?
Yeah. So number one is we call it our goal planning. So we want to get super, super clear on what do you want to achieve and why. And obviously that why is really important as well. So it's knowing, and as I said, starting with the end in mind. So we want to know what exactly are we trying to build? What's going on? What's the business goal? Are we trying to build the biggest business in town? Or are we just going to stay small, the one-man band? What are your lifestyle goals? Are we wanting to buy a house? Are you looking to have kids? Are you or your partner wanting to take time off if you have kids? Are we sending your kids to public school? Are we sending your kids to private school? All those kind of questions, which might seem a bit strange to ask if you haven't even started a business, but it's knowing that ahead of time and saying, okay, well, what else have we got going on? How much income do we need to take from the business to support your lifestyle? And again, maybe jumping back a bit, but that's a big thing that how much do you pay yourself? It's like, well, how much do you need to pay yourself? So what are your income needs? What are your expenses needs personally? So we want to try and get super clear on that. And that's number one. And then number two is getting financially organized. So getting super clear, getting everything up to date. So getting your tax returns up to date, getting super clear on what is your current financial position. So we know what the goal is. So where do you want to be? And then we need to know your starting position. So where are you right now? And that might take us 3 months if you're an existing business owner to get everything tidied up, or 6 months, maybe 12 months, who knows? But get everything tidied up, getting super clear on exactly where are you right now? What do you own? What do you owe? What do you earn? What do you spend? Are your financials up to date? Again, looking at who's on your team, are we clear on what they're doing for you? So it's just getting financially organized and getting everything clear so you know exactly what's going on. And then for the remainder of that time, it's just working through and setting up bank accounts, making sure that we got a simple structure that how much are we withholding for tax? So we talk to your accountant to say, okay, we're earning this much. How much do we need to withhold for tax? How much can I afford to take out of the business? What are the business plans? How much do we need to retain in the business for cash flow purposes? So it's getting that bank account structure in place. So that's probably where we'd start next, is getting that super organized so we can clearly see, we log into our business bank account. Okay, there's my money. I'm allowed to spend that. There's my business's money. I'm not allowed to spend that. There's the tax account. So I know exactly what's happening to try and free you up. So you've already going to have so much on your plate as the business owner, running the business, doing all the things. If we can make your financial world as simple as possible, then that's going to free up your headspace to be able to focus on the thing that makes you money. And then we'll start looking at things like risk protection structures in regards to how do we reduce risk. So do we need to restructure your company? Do we need to put in place the right insurance on the business side? Do we need to put in place the right insurance on the personal side? So are we exposed anywhere? Is there any holes that we can fill by reducing some of that risk? We start to look at things like estate planning. So making sure that we have the right documents in place to protect you. And then we start looking at the fun stuff, because that's kind of a bit boring going through that process. But then we start looking at the fun stuff of how do we actually grow this thing? What are we looking ahead? How do we grow the business? How do we grow your personal assets? how can we start reinvesting or investing in things that are going to help us make us money going forward. So that's a summary of what it might look like for the first 12 to 18 months.
Yeah, that's great. And I think what I've learned today is that we're trying to obviously start with the end in mind if we can, and see you earlier rather than later. But really ask those questions of our A team, as I called them. Really good question to say, well, what are you doing? What are you doing? What is your role in my company? What are you doing, and how can you help me more? And if we can't get those answers, thinking about how we're having someone help to coordinate those professional advisors so they are a team, so they're talking to one another to get the right results.
Yeah,
definitely. So thanks very much, Ross. That's been great.
Cheers, Dean. Thanks again for tuning in to the More Than Money podcast. I hope you enjoyed that episode with self and Dean Holmes, and I hope you got a lot out of it. Before I let you go today, if you don't already, be sure to follow us on Instagram. You can find us at More Than Money AU over on Instagram. If you have any questions, any money questions or business questions that you would like answered on the next episode or on one of the future episodes, be sure to shoot your questions there, and we'll do our best to answer them throughout the podcast. Hope you have a great week.
If you've enjoyed this episode of More Than Money, make sure that you subscribe to keep up to date with all of the latest episodes. And feel free to like, comment, and share with a friend.